Hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka.
And I'm Yatin, Mota.
Well, the market started off on a subdued note, Yatin, but look at the kind of recovery that we saw in the last 2 hours of trade, just like yesterday. Yesterday, of course, the situation was completely opposite, but today, a 350-point recovery from the day's low, which pushed the Nifty above that 22,250 mark for the first time ever. So we hit a fresh high after a day-long break, right? So bulls are back in action, and as usual, it's the second half of the session that saw a lot of action. And of course, the mid and small cap indices were also outperforming. But Yatin, what would you attribute to the, to the change in scenario in the second half that's been happening throughout the week?
Yeah, and Nandita, most importantly, today was the weekly expiry. And usually we have seen on the, expiry day that when there is a trend, so, there was a trend that Nifty was hitting fresh record levels. So, in order to maintain that trend, probably the expiry wanted to be above 22,000. And instead of 22,000, which was a level throughout the day, we saw another 200-point bump up coming in. So yes, quite a strong move coming in from the benchmark indices. Obviously, this is led by big boy Reliance Industries, L&T.
Even Coal India, I think, saw very good recovery.
And in general, there was buying in IT stocks as well. From the day's low, a lot of banking stocks also recovered. So yes, it was a good day of trade. And since the morning, a lot of mid-caps were also holding up. And a lot of action in the mid-cap space as well.
Right, Yatin, as you were mentioning, IT stocks have, snapped out of their recent string of losses. Just want to mention, Nvidia reported great set of numbers yesterday. Although Nasdaq ended lower yesterday because the numbers came post-markets, and after hours, the stock saw a good bump up. So today, the Nasdaq will be reacting to Nvidia's number as well. But, autos, realty, metals, FMCG, these were among the gainers aside of IT. On the flip side, I think banks, as you mentioned, they were under pressure, but they came off days lows. And pharma also another pocket that was under pressure today. So individually, Yatin mentioned a few names, but HCL Tech and Bajaj Auto, these two stocks gained in excess of 3%. Bajaj Auto was witnessing some bit of selling pressure, Yatin, but today has made a very good up move, and so has Coal India, HCL Tech, M&M, all the IT names in green. On the losing end, Yatin, I think when I last checked, all the three top losers were from the banking pack. So IndusInd Bank, HDFC Bank, Kotak Bank, these are some of the banks that were under pressure. Aside of that, SBI was also under pressure. But Reliance Industries, one stock to mention, given the fact that that also contributed to the Nifty's gains in the second half. But Yatin, from the broader end of the markets, ABB India continues to spurt.
Yeah, and quite a strong set of earnings, good conference call. Yesterday the stock was up 10% odd, and today also that trajectory continued because a lot of brokerages have upgraded the target here. They've increased the target prices, so good going for that one. One of the top F&O gainers. Apart from that, if you look at the mid-cap space, NCC as well as data patterns, these two stocks also moved 7-8% each. What was not doing well is the likes of Glaxo, Sun Pharma, Advance, all of these pharmaceutical stocks were slightly under pressure, 3.5% down for all of them. Phoenix Limited and JBM Auto also losing in trade today. But what was doing well is the likes of Premier Explosive, that stock was up 7%. Tourism Finance Corporation, a lot of block deals here. The stock was at a 5% upper circuit. Dishman Carbogen MX, that stock was up 10%. And so was the case with all of these defense stocks, BDL, BEL, all of these stocks moving by nearly 4-5% each.
Right, lots of movers and shakers in the mid-cap end of the market, and of course even in the large-cap end of the markets, as we saw a very good recovery coming in the second half. But let's talk about the stocks that are on our radar this afternoon. On that note, of course, paint as a sector was in focus today, Yatin, given the fact that Grasim has launched Bidla Opus. It has kicked off paints business by commissioning plants in Panipat, Ludhiana, as well as Cheyyar in Tamil Nadu, right? If you look at the group chairman, Aditya Bidla group chairman, Kumar Mangalam Bidla's commentary, it looks like he's ready to shake up the entire, paint sector, given the fact that, 6 new plants have been built from ground up across India. That's what KM Bidla had said. And he said that the, 3 plants, of course, have been inaugurated today. 4th plant is expected to be operational from the first quarter of FY25, and the 6th plant is expected to be operational by the 4th quarter of FY25. In fact, capacity, OPA's capacity exceeds that of the combined capacity of 2nd, 3rd and 4th players in the market, which is, a cause of worry for the likes of Berger Paints, Astral and the likes. Not Asian Paints so much because it's the market leader, and remember, Opus is aiming for the number 2 position, and that means it's not such a big threat to Asian Paints. But of course, you'll have to see how the expansion really pans out, and whether or not Asian Paints also manages to lose some bit of market share to Opus. But that's of course something that time will tell. But if you look at some more commentary from Mr. Birla, he said that the paint business has already registered 300,000 painters and contractors, and Opus, as I mentioned, is aiming to be number 2 player in the market. If you look at what the brokerages are saying, Jefferies has a buy rating on Grasim, target price of 2,300 rupees, and Jefferies expects aggressive strategies to gain market share from Grasim's end, and that would of course shake up other players as well. Higher discounting, promotional offers, these are some of the factors that could impact profitability as well. And of course, analysts, although they don't expect such a big impact on Asian Paints, they say that the next 12 to 15 months will be quite interesting to watch, when it comes to the paint sector, something that they haven't seen in the last 40 to 50 years. Yatin.
Absolutely. And Kumar Mangalam Birla also commented on Vodafone Idea today on the sidelines of this press conference of the paint plant opening, that they are trying to revive, and obviously there is no question of exiting the telecom business, and they are looking to onboard a few investors to revive the Vodafone Idea business as such. Obviously, post this comment, both Vodafone Idea and Indus Tower had some bit of spike in trade today. But moving away from Grasim, Ultratech and the Birla Group companies, let's also talk on the oil marketing companies, which was slightly soft in trade. We have CLSA today, which came out with a sell report on HPCL, BPCL as well as IOC. Now the logic here is valuations. Purely on the basis of valuation, CLSA believes that the rally that we have seen in IOC, HPCL, BPCL justifies the valuation, and from here on, if the stocks try to move further, they would be more expensive than the global peers. So yes, given the fact that there has been a strong rally in oil marketing companies, the risk to upside would be high amount of valuations, and hence a sell rating by CLSA. They believe a 5 to 7% rally in crude prices could impact or hurt profitability for the entire OMC pack. They also believe that the government fiscal goal may make it look avenues of raising fuel tax moving ahead, because as the government increases spending, probably the one easy thing to tax is fuel, which is petrol and diesel. At 5.5 times EV EBITDA on FY25 estimates, IOC, BPCL, HPCL are baking in a GRM of nearly $10 per barrel, which probably we haven't seen for quite some time. So yes, CLSA is slightly cautious on the entire oil marketing pack.
Yeah, Yatin, and after the stellar and stupendous run that we've seen in these OMCs over the last 5 sessions, we've seen some bit of a cool off. All these all the likes of HPCL, BPCL and IOC, they've corrected somewhere around 8 to 10% in the last 5 sessions. But with that, let's take a look at the other stock on my list, Graphite India. Yatin, that stock was up 12% today. There is a Jefferies note on the stock wherein they have a buy rating. Target price has been raised by 19% to 650 rupees per share. In fact, Jefferies has also mentioned that even though the numbers missed estimates, volumes grew in the quarter gone by due to better utilization. But they've also mentioned that pricing and margin pressure could continue for the next 2 to 3 quarters going forward, which is why they've cut the FY25 to FY26 EBITDA estimates by 2% and 7%. FY24 of course is expected to be muted, but for FY25, the brokerage is cautiously optimistic on the stock going forward, on the macros rather, going forward. And they say that improved financial outlook, new contracts, advancements in the graphite technology as well, and a broader market recovery, these are some of the factors that could bode well and, come out as potential catalysts when it comes to graphite. Also the fact that, global steel production trends, which is a key indicator for graphite demand, that has shown signs of fluctuation, but that is something that could be a risk and that could impact the core business of the company. But the new foray, the company has made new foray into new segments and strategic capacity expansion that the company has undertaken. These are some of the factors that could hedge against any industry specific risks when it comes to Graphite India. But all in all, they are cautiously optimistic on the future. And if you look at the stock performance, Yatin, over the last 1 year, the stock has gained somewhere around 90%. So, you know, they are not out and out optimistic, but they are cautiously optimistic, and they have listed out some factors that could work well for the company.
Absolutely, and given the fact that there have been a lot of concerns regarding the pollution created by the steel industry, graphite, and the quality of the entire blast furnace helps reduce those emissions. So probably all of these companies also have a role to play moving ahead.
Well, then those were the stocks on our radar this afternoon. But you know, Yatin, now I feel that, you know, I was talking to a colleague of mine also. He mentioned that now just look at the market in the first hour of trade and in the last hour of trade. You'll see a different complexion altogether. I know that's something, that's a new trend that has been emerging over the last few sessions. Of course, we are at record highs, so volatility is the name of the game now. But, you know, this was a complete turnaround in the second half of the session. But with that, we've come to the end of this edition of Closing Bell. You guys stay tuned to Moneycontrol for all your other news and updates. We'll be back with the markets in the morning at 8:30 a.m. Catch us then. Thanks a lot for watching.